Hi everyone, welcome back. I've had a lot of requests asking about how I day trade. Now, as you know, I've only recently joined Desire to Trade coaching team, and I'm gradually getting my head around their strategies, all brand new to me. Okay, so starting out in 2014, 2015, I was doing nothing but price action day trading. And it's that I'm going to talk about today, the way that I managed to become successful and consistent at that, making a good income from it, a good return. And once my capital reached a certain size, it gave me the freedom to come and live here in Thailand. So yeah, I thought I'd run through this, just do a short video explaining briefly how I do it, what I do, and just showing you the outline of that, as so many people are asking about it and are interested in it. So what I'll do, I'll flick over to my charts now. It's almost 20 to 3 Thailand time, so it's almost 20 to 8 in the morning, London time. London Stock Exchange opens at 8 o'clock. And so I'm going to be getting ready now. This is the time that I usually sit down and start preparing myself for the London session when I'm trading it. But the thing is, the preparation for this price action day trading, the London session or New York, you can apply this to New York as well. The actual preparation for it is very, very fast, takes no time at all. But then, of course, you're sitting there at the charts. It's one of the things, I don't mind it when I've got time, but there's so often other things going on. So I like to be able to use one of the Desire to Trade methods to be able to spend less time at the charts. But when I'm at home, I'm here in the office doing other things, I can have this running on a side screen and spend some time actually watching it. But usually day trading, the London session or New York, I'm there for a minimum of 30 minutes. Sometimes it can be 3 hours, depending on how price moves, what the volatility is, what the momentum is. But anyway, let's go through the setup, and I'll go through briefly what I'm looking for when I'm trading this price action day trading system. So first thing I need to do before I sit down and trade, most important thing really, is to have a look at the red news events for the day. Now, the thing is, if you're trading red news, you don't want any sudden surprises. You don't want, in this instance here, okay, it's much later on in the day, but US dollar red news event coming out. It's not until 10 o'clock tonight, Thai time. But the fact is, if I was trading at that time in the day and I had a US dollar position open, I wouldn't want to have that sudden surprise of spikes and increase in spread and maybe even being knocked out. So I need to know what's happening with the red news events for the day. So all I'll do is I'll look at these. I'll always mark these down. Usually on a Sunday evening, I'll sit down and I'll mark them up on my whiteboard, which is sitting just behind me here. And I'll mark down all of the week's news events. Now, the reason for that, I like them on the whiteboard. If I walk into my office, I can just glance at that, glance at my watch. And if there's a red news event coming up, I can sit down and trade that red news event. So that's the other reason why I like to have these marked up on my whiteboard. Don't even have to come to the website and check it out. It's there on the whiteboard as I walk into the office, and I can see immediately if there's something for me to sit down and pay attention to. So just for today, at 10 o'clock tonight, US dollar, ISM, manufacturing PMI. That's the only red news event today. So nothing that's going to affect me. Oh, that 10 o'clock, by the way, of course, that's Thai time. So there's nothing that's going to affect me coming into the London session or trading the London session today. So that's the first thing. Most importantly, to have a look at that to start off with. So these are the charts I trade price action with. Very, very simple, very, very plain. I like them as bland as possible. I don't want too many flashing lights, whistles and bells. I like to keep it nice and simple, especially if I'm sitting here for 2 or 3 hours in front of these charts. I don't want all kinds of things triggering off. So I like to keep them as simple as possible. The only indicators I've got on here is this line. Now, this line here, this indicates the Tokyo session. This is when the Tokyo Stock Exchange opens. And so I need that as a starting point for my read. The other indicators that I've got is spread, not really so important with day trading, but very important if I'm trading red news. And by the way, if I'm trading this normal day trading here, and there's a red news event coming out, there is a method that I've got to actually incorporate that with what I'm doing here. I won't go through that now. I'll keep the red news event as a separate video, but I can actually incorporate the red news trading with my price action day trading. So spread, that's very important for news. And also it's nice having it just flashing up there or showing up there. If that starts to increase massively, there's obviously something going on in the background. So at the moment, we're on the Australian dollar, US dollar chart. If that starts to increase, then it instantly tells me there's something happening with the Australian dollar, US dollar. It's a heads up, and I can start looking at the other pairs to see if there's anything that I can take advantage of. But anyway, so that's the spread. The other thing is the candle close. Again, that's really for red news, but at the same time, I need that for when I'm trading, using my day trading method, because it incorporates with ranges. If I'm taking a range break trade, I need to know when the active candle is going to close, because it can affect the way that I trade range breaks with this method. This here, the range from 2 a.m. to 9 a.m., 62 pips that is. And all that shows me is that since the Tokyo Open until 9 a.m., then that is the range. That's the actual range, the price movement. So that's from here and to here. It just gives me a gauge as to how big that space is. Looking at the chart without measuring it, I don't know, but I now know, glancing at that move there is 62 pips, just over 62 pips. Something else that I can use as a reference point when I'm deciding whether I'm going to take a trade or not. Okay, so the pairs that I actually trade as a price action day trader are the Euro US dollar, the Euro Japanese yen. Let's go through these. Euro US dollar, Euro Japanese yen, Pound US dollar, Pound Japanese yen, Australian dollar, Australian yen, US dollar, Japanese yen, US dollar, Canadian dollar, the Canadian dollar, Japanese yen, and New Zealand dollar, US dollar. So they're the 10 pairs that I'll trade and keep an eye on when I'm actually working with the price action strategy that I use. Right, so this is it. This is an explanation I've been giving you. It's taken a little bit of time to do that, but just imagine you guys aren't here. I walk up, I open my charts. This is instantly set up for me, obviously, as a template. I don't have to mess about with anything. So instantly I can see where the Tokyo Open is, and I can see what price action's done since that open. And that's what I'm looking at. I'm looking to see what price has done since the Tokyo Open through the Asian session. And it's this simple, me drawing up my plan. I'll show you, first of all, I'll show you exactly what I'm doing and what I'm thinking. I don't have to speak it out loud, obviously, because there's not an audience here usually. It's just me and my computer, all on our own. So, but this is what I'm actually going through, and I'll just explain to you as I'm doing it. I'll usually just keep a sheet of paper here, and once I get into the trading, then I'll write out my proper, my journal on a piece of paper as well. It's always a separate sheet and it's pen to paper. So initially it's just a scrap of paper to give me the initial trade plan. Right, so I walk in, open my laptop up, there's the charts, and this is what I do. Euro US dollar, that's ranging. So I'll mark that as an R. Euro Japanese yen, that's a move to the downside. Downside trend. Pound US dollar, ranging. Pound Japanese yen, downside move. So a trend to the downside. Australian dollar, US dollar, downside move, trend to the downside. Even though we're seeing this pullback, still a trend. The Japanese yens are obviously the dominant force, and I'll explain that afterwards. Australian dollar, Japanese yen, again, move to the downside. That's a trend going down. US dollar, Japanese yen, price starting off here, and we're now coming down to there, pulling back to here. That's a range for me. So that's ranging. US dollar, Canadian dollar. It's a move to the upside, trending upwards. Canadian dollar, Japanese yen, moving to the downside, a downward trend. And New Zealand dollar, US dollar. I'm going to mark that in as a range. And that's it. Right now, I'm ready to start trading. I've got that scrap of paper with these notes on. I can glance at that whenever I need to, if ever I need to. I can even write down on there any positions that I take, and I'm ready to trade. So where are we at the moment? What's the time? It's now 14:51. So yeah, we've got about 10 minutes before the London Open. I could actually start taking positions now. The earliest that I'll start trading is 1 hour before the London session. No earlier than that, really. I don't trade the Asian session with this day trading method. It's only for the New York and the London New York sessions. But so where do you define where that starts? I'll start trading, taking positions 1 hour before if I'm in front of the charts, that is 1 hour before the London session opens, or 1 hour before the New York session opens. And that's where my dating point is, my starting point. So let's have a little look at the charts, and I'll go a little bit more into detail as to what I'm aiming for, what I'm looking for. So I said the Euro US dollar, that's in a range. And so I'll simply mark this up like this. So I know exactly what I'm looking at. As I'm flicking through the charts, I can see there's nothing for me to do on this until and if price either breaks to the upside or if price breaks to the downside. I'll take it short there. I'll take it long there. And it's that simple. But ranging price action, you can see it's come up from here. I'm not interested in this area at all. Needs to break out before I'm interested in taking a position on that. Euro Japanese yen. Okay, this was different. We've got that trend to the downside here. Nice big moves to the downside, 108 pips. Pulling back quite deep here. It's just easing off a little bit. So with this still being in a downward trend, I'm looking for a pullback. Let me show you what I mean. So I'll use one of these lines here. I'm looking for price to pull back. Okay, so we can see what price has done here. It's come up, come down, pulled back. This candle has pulled down a little bit. This candle has come down even further. Okay. This active candle, let me clear that off. This active candle has actually pulled back and come through my marker. That marker that I've got there is my entry point. And because this is in a downward trend, I'm looking for that trend to continue to the downside. Price coming up, coming through that entry marker, that green line, and I could have taken this short. I'm not going to take any positions while I'm explaining this to you guys. I don't want to risk my money on this while I'm doing this. You need to concentrate fully on what's going on. But just now, in fact, right now, there's an entry point on this. How long have we got? We've got 5 minutes, just over 5 minutes left on this active candle. And where price is now it's actually come up and it's come through that marker. And we could take this short to be looking for a further move to the downside. Okay. If I take a position like this, I'll instantly put a stop loss in. So if I took this short right now, Euro Japanese yen has a 12 pip stop loss. So I'll put my stop loss in place. Let me just do this. Stop loss would be at 12 pips, meaning that if this pulled back, price pulled back, hit my stop loss, I'll be knocked out. But that, it's a safeguard. You've got to use it with this method, especially. You've got to use stop losses in pretty much all trading methods. Any strategy that you're using, the majority of the time, you're going to be using a stop loss. It just protects your capital just in case the worst case scenario happens. Like I say, right now, that's in a perfect position. It's come up and through that line that I've got there for me to be able to take this short. I could take it short right now if I was actively trading, and I'd put my 12 pip stop loss in place. Let's clear that off. Pound US dollar. So it's looking like all of the moves, as we flick through these charts, all of the moves are about the Japanese yen pairs. Anything with a Japanese yen in it has got that clear directional move. Anything that hasn't done a great deal, has it? So we're now looking at the pound US dollar, and we can see this price has pulled up from now. I'm down. This is ranging price action. You can see price is pretty much in the middle of that range at the moment. Came down here, made a break to the downside, but then since then it's pulled back up well within that range. So again with this, I'm just going to mark this up with these lines. So I know that I've got, as I'm flicking through the charts, if price action picks up and it gets quite exciting, you're fully intent on what's going on, instantly as I'm flicking through these charts, I know there's nothing, absolutely nothing for me to do until I see price breaking either to the upside or to the downside. And I'll take it long or I'll take it short. And you can do that by pulling the trigger, a manual entry, or you can set a pending order, either to the upside or to the downside, whichever way the price is moving. So what I'm saying is if this started to pulse down on the next active candle and it was getting close, then you could simply right click on that line, put a pending order there ready for a sell stop, and that way you wouldn't miss out as price actually hit that line. So that's what I'm looking for. Again, with the range, it's very, very simple, this method. Onto the pound Japanese yen. Again, another yen pair. So we've got from the Tokyo Open, price move up. And then we've got this move to the downside, trending to the downside, pulling back, and pulling back even further, much, much further. And where's price right now? In fact, let me measure this because I need to know how big that candle is. Okay, we're all right with that. So there's some little nuances around this this trading that I'm not going to be able to go into full details, obviously, in this video. This is just an overview of what I'm doing. But little nuances, that's why I measured that candle. If it was over a certain size, then there's different rules and different structures for that. But just as an overview, so people get a rough idea of what I'm doing with the day trading, I'm just skimming over the surface. Bear that in mind. So with this pair, we've seen move to the downside, and then we've seen price breaking that entry point. Let me put the entry point in place, which is here. So green for go. It's that entry line there. It's the high of that previously closed candle. With a downward trend, you're looking for price to break the high of the previously closed candle. If it was an upward trend, you'd be looking for price to break the low of the previously closed candle. But like I say, right now, this has moved up through that line. Perfect entry point to take this short and look for a continuation of the move to the downside. Moving on, Australian dollar, US dollar. So we've seen this move to the upside, coming down quite deep here. Putting this one into a trend to the downside. We just got a new candle open there. You can see new candle has opened up. 15-minute candles, by the way. I only ever work with 15-minute candles on this day trading. So you can see price has come up again after that initial downside move. So again, one of the nuances, I'm going to measure and see how far that's actually pulled back. I need to see how close it's getting to that move there. That's okay. We've still got 26 pips left from where price is at the moment to where price started out at the high of this Asian session. Okay, so right now we're still in that move to the downside, and we could actually take this short as price is bumping up against this entry point. There's the entry point. You can see price has come up, come through. It's just come through there to be able to take this short, looking for this price action to continue this downside move we've seen throughout Asia, even though it's pulling back. Some people might look at this and they'll pause and they'll think, no, I'm not willing to take that. They might actually wait and see if this price drops a little bit, then look for a pullback, then take it short. But like I say, these are all the little nuances and the details of this strategy that I'm trading with this. But right now, we've just seen an entry point on this. Let's go over to the Australian dollar, Japanese yen. Again, this all seems a bit long-winded, but I'm doing this without having to explain and describe exactly what I'm doing. There's no camera on me. I can do this within seconds. So flicking through the charts constantly as I'm trading it and seeing what price is doing. So what are we on now? Australian dollar, Japanese yen. Move to the upside, coming down. Another Japanese yen pair, giving us that break, that momentum, that move to the downside. Deep pullback, but still I'd be looking for further downside movement on this. Shrink that down a little bit. And you can see we've just had an entry on this as well. So I'll pull my entry level in there, and you can see that price has just spiked through. That wick has just come through there, giving me a perfect entry point to be able to take this short. And again, looking for downside moves. US dollar, Japanese yen. I'm going to be measuring this one, I think, because price has come up, come down here. At this point here, we were seeing that move to the downside, a downward trend. This is where price started out, though. Price is pulling back. It's kind of like a bit of a pause for me on this one. I'm sort of like debating as to whether to go with the trend to the downside or is it pulling back. So I can always check it. I can measure from the height where this price has pulled back to there. Okay, it's still 42 pips. So again, this is still in that trend to the downside. And it's another one whereby I can actually, Let me just do this and put the marker in place so we can see what we're looking at. There's the entry point, and you can see price has actually come through it. Price has come through. It's right on that marker at the moment where this could be taken short. And again, looking for that price to reverse again, start another move to the downside. So US dollar, what were we on? US dollar, Canadian dollar. Pulling down here, moving up, continuing that upside move and continuing even further. So with this pair, we've got a trend to the upside. We've got this upward move here, and we're looking now to be able to get in and take this further to the upside. Entry point, let's draw that in, has actually been hit again. We're seeing a lot of entry points. If I was actually trading live right now, I'd have a good few opportunities to be able to take positions and get in. So you can see this candle here has pulled back. It's come through our entry point, or just sort of like pierced it on this wick. And that's an entry point to be able to take this long. And I'm looking for this to continue to the upside. So that there is another opportunity. Again, the nuance is the different things that we're looking at when we're trading. We could actually take this, but what I like to do as well is go through the pairs and see which ones have the higher probabilities, which ones have had the bigger moves throughout the Asian session, and which ones are showing out as possible entries, and I'll be more inclined to focus on them. That higher move, that bigger move, and of course there's no guarantees, we don't know. You could see a massive move to the downside or to the upside throughout the Asian session. Doesn't mean to say it's going to continue through the London session, but it's the probabilities that we're working with, and that's all we've got. And so I'll be more focused on those pairs that are actually moving bigger throughout the Asian session and be more inclined to focus on them and take a position with them. So there you go. We've got the entry point on that. Where are we now? You can see price is actually bumping up against that still on this live candle. So that could be taken short there. Canadian dollar, Japanese yen. Another Japanese yen pair. So we've seen this downside move, and it's taken off to the upside. And then this beautiful, beautiful move to the downside. Stair-stepping move to the downside here. It's a 90 pip move throughout the Asian session. Now we're seeing it lifting off again, big time. But still, it's another one. This is the entry point, and we're seeing it hit right now. Okay, so price has come up. It's actually pierced through our entry point, giving us the opportunity to take this short, and we're looking at this trend to the downside, continuing as we're going into and through London. New Zealand dollar, US dollar, last of the pairs. Okay, from here, we've seen this upside move. This is where price started out on that Tokyo Open. And it's pulled down, drifted down, pulled up. So let's see where we are with this. This was one that I was kind of doubting when I was looking at it. 21 pips. Okay, it's, okay. Something that's very, very important whenever you're trading. And the fact is, you can't be rigid in your decision making. You can't be rigid in what you decide right now moving forward is going to be the same. You might make a decision like I've done on this. Initially, I looked at this, I questioned it. Now I've actually measured it out. I've seen that the move that's going on at the moment with New Zealand dollar, US dollar, it still puts it in a position where I can mark this as a trend. And that's what I'm going to do. Forget that initial read. Now I've actually dug into it, looked at it. I can change over to a new read on that. And I'm going to be looking for a continuation of a downside move on this, looking for that pullback to enter. And I'll mark that up on the chart in a minute. So very, very important. Don't be stubborn, I suppose, is what I'm looking for. If you decide or you make a decision, this is what I'm seeing. That's how I'm trading it. Markets move. Don't sit there thinking, no, I've decided it's that and that's what I'm doing. The markets are fluid and you have to be just as fluid. Okay. So make sure you're not stubborn and you go with the flow, if you like. Just go with what's happening in the markets. So right now, this hasn't quite made it. Let's draw the line in so we know what we're looking at here. So that's the entry point, green for go, price pulls back, hits that green line, and that's where we can take this short. And again, we're now looking for the continuation to the downside of that pair, New Zealand dollar, US dollar. So that's it. That's basically what I'm doing. That's how I'm looking to get into trade. So moving on from that, if I just sat down now, the thing with this is as well, if I don't sit down until a bit late, if I sit down and I'm already 5 minutes, 10 minutes, 30 minutes into the London session, that's fine. That's okay. You can sit down, you can start trading then. So being there right on the dot isn't really quite so important. But I do like to get and sit down pre the market opening. Allows me to do my draw and my trade plan, if you like, on what's happening and how I'm going to be trading initially. And for me, it's just a nicer way to drift into the trading morning. So that's it. All I'll do now is keep flicking through the charts. As a new candle opens, so this one here, you can see there's no change on this. The Euro US dollar, it's still in a range. Nothing for me to do until I see a break either side. The Euro Japanese yen, we've got that move to the downside. Perfect entry point on the last candle, and I could have taken this short because I saw it, but I'm not taking any live positions. And now you can see from where I got in, I would now be in a position, price is starting to go into profit. Well, it's already in profit. You can see that would have been the entry point there, and price has already moved down there. So already would have been in a position that was showing some positivity. If you come to the charts, you've marked them up, you have to go and make a coffee or do whatever you're doing, come back and you've missed the entry point, don't worry about it. Don't be tempted to jump on board. And, once the position's missed the entry point, once you've missed it, don't be tempted to jump on board late. You've got to hit that criteria exactly. So what you do in this position is you would simply move this up to the new entry point, which is there, the high of the last previously closed candle. You'll be looking for this price now to return up to here. And in fact, this candle, you can see when it opened there, it pushed up, giving the entry point to be able to take this short even there. And that would have been a much nicer position, giving you a much bigger move already. But you've missed it. So that fear of missing out should not kick in. And you shouldn't think, I don't care anyway, I'm going to jump on board now. Stick with the criteria. With any strategy you're trading, be sure to stick with the rules, stick with the criteria. And overall, that's a formula for a winning strategy, for a way of becoming profitable. You start changing the rules. Oh, don't worry about that. I'm getting a bit lower. You're all over the place. You're not trading a strategy. You're just gambling. Okay, so let's clear that off. So quickly flick through these now. Pound US dollar, that's still in a range. Nothing to do on that. Pound Japanese yen, again, perfect entry point there, although this is pulled back even further. And again, you would move your entry point up. In fact, let's do it quickly. I'm not going to go through all of these. You get the idea. So I missed the last entry point. This is the new entry point. Price has come up into there, giving me the opportunity to take this short, look for further downside movement. Australian dollar, US dollar, entry point there right now. Australian dollar, Japanese yen, another entry point. Beautiful entry point there on the US dollar, Japanese yen. It's come through. It's hit that. You could have taken this short on that green for go entry line, and price is coming down now. US dollar, Canadian dollar. Price is pulling back still. Comes through the entry point. Perfect entry point to take this long. Canadian dollar, Japanese yen. Entry point again to be able to take this short. Where we are right now, it's pierced through that entry point, and you could have taken this short. New Zealand dollar, US dollar, another entry point to take this short. Now, the other thing I'll mention quickly is when you see a lot of reversals like this, I mean, we've seen a good few candles now going against what our read is, i.e. a trend to the downside. So in that scenario, you might want to look at these, and depending on your risk tolerance, if you like, how adverse is your risk strategy. Something like this, you may want to ease off a little bit. And instead of taking these positions, any of these positions where we're seeing a big pullback, I mean, you look at that there. How far is that moving back? Let me just measure it and see. So from here, the low of that to where we are now, or up to that spike, we've got a 76 pip pullback up to here. You might want to sit on the sidelines and think, no, that's pulled back too deep. All of these Japanese yen pairs, it looks like they're turning around. Again, I don't know if it's a turnaround or if it's just a stop run, i.e. like stop losses being hit. But it's entirely up to you. And it's kind of discretionary what your risk tolerance is like, and whether you're willing to risk anything on any of these positions, or if you want to wait for a little while and see if that pulls back down again and comes down. So like I said, I'm not going to go into all of the details. It would take far too long. It's a complete course on actually trading this. So I'll leave it there. I can't go through all of the rules and the stipulations regarding trading this method, not in a short video like this. That in itself is a complete course. But I just thought, because of all the questions that I've had, people asking about how I do my day trading, how I approach it, that's it. And looking at this, you're going to think, oh, I couldn't be bothered with that. It's a bit long-winded, but really it isn't. It's so simple and it is so fast to actually set yourself up, do your read of the charts, the 10 charts that we trade, and sit there ready for trading. Looking for pullbacks, looking for range breaks, and it really is that straightforward. It's just me sitting here waffling on, telling you guys about what I'm doing, trying the best I can to explain to you how I do it. That's what's taken the time. Okay, thanks very much for your patience. Thanks for watching. Please remember to take a look down the description, because you'll find links to everything that happens here at the Desire to Trade. Many strategies to suit many different lifestyles, any time constraints, any time restrictions you've got. I guarantee you'll find a method in the Desire to Trade that will suit your lifestyle and your way that you want to trade. Thanks very much.